Hello everyone, welcome to Stockit channel. So today we are going to have an overview on Infosys results. Let's understand this from Manjunath sir. So please go ahead. This is purely on educational purpose to understand more about the results.
Yeah, Infosys result has been done yesterday. So let's have a quick review on Infosys. So what to look for results is importantly, as a first point of view, every investors are interested in knowing how much profits they have made after everything deduction, everything, how much cash they are going to get on their hand. That is called net profit, profit after tax. Okay, so 6,134 crore. Which is eventually getting reduced compared to the previous quarter. Previous quarter was 6,586 and now it is 6,134 crore, which is almost 300 crore lesser. So investors are getting scary, or investors are might not show the interest because they are degrowing. As soon as they find it is degrowing, then it's a question mark to them, right? So this is what net profit called PAT. So PBT, that is profit before tax. PBT is nothing but profits whatever earned before paying taxes is 8,466 crore. After paying tax is 6,134 crore. And this whatever is called EBITDA. EBITDA means the profits. For example, sales, they are doing 37,400 crore. From 37,400 crore to 28,400 crore, they have made expenses. So that means ideally they have arrived with 8,998 crore as a operating profits. So will I get complete 8,998 crore to my hand? No. My simple answer is no. The reason behind it, they have to pay some interests, and also they have to deduct the depreciations. Company might, whatever the investments they have done, whether that investment is giving 100% returns or is there any reduction, all these things will be deducted. Like for example, interest, if they have taken any loan, directly that interest will be paid from the profit of operating profit. And depreciation is also like 1,121 crore has been depreciated. The materials or items, whatever they have invested, materials or equipments, all this straight away it's getting depreciated. That means it will be deducted from the profits, operating profit. That is 8,998 crore minus 1,121 and minus 82 crore. That is called EBITDA, in earnings before interest and depreciation. Okay. And taxes.
So these are the performance of Infosys quarterly.
Yes. Right? Yes.
All right.
Here what to look? Importantly, PAT, they have degrown. So investors will not be showing interest. And also on an yearly, if this is what we have seen on quarterly performance. If we see on yearly performance, that is 22 to 23 year-over-year performance. On year-over-year performance, yes, they have grown. That is 22,000 crore to 24,000 crore. They have grown. That is good, decent profits. At end of the day, they have grown from this other income, which investors might not like it. Okay. The reason for not sorry.
Go ahead, sir.
Yeah. Why exactly investors are not liking it? Investors don't want to see the other income, because investors wanted to see the income from the sales. Because Infosys is an IT company, they're expecting their IT core strength income, not from this other income. If they wanted other income, they can go to the other company, right? So they are interested in getting the revenue from the sales and profits. So that's why investors are interested in this. So 2,700 crore is coming from the other interest. So that means eventually it is a flat almost 30,000 crore they have done previous year. And this year, if I reduce this 2,700 crore, which they have earned here or through other income, that means it will become how much? 2,700, 30,600 crore. So easily 500 crore, it's a flat. You can call it as 1% or 0.1%, 0.5% growth. Investors will think, array, our Infosys is not growing.
So this is our view, right, sir? That they might think, the investors might think, but we are not.
It is our view.
It is only our view.
Our view. So what investors are thinking, we are looking at that point of view or at their shows. But you have to do your own analytics, ma'am. But this is what we are doing it for an educational purpose.
Correct.
Okay. And earnings per share.
Right.
Earnings per share, that is 58.08. Earnings per share, they have grown. Good. This is very good. And
On a
dividend
complete
paid.
yearly, it is 58.08,
Correct.
which is quite decent.
Quite decent. Earnings per share. So investors are happy that, okay, EPS is growing.
Mhm. And the net profit overall also, it has grown
So,
on a complete year.
yes.
Right, sir?
So I'll show you this earnings per share. See, 24,108 profit I have earned, for example. Okay. This 24,108 profit, I have, that means Infosys has paid out as a 58% dividend. That means 24,108 into 58%. That means it comes to around almost 14,000 crore they are paying towards dividend itself.
Exactly. The sharing.
So the 14,000 crore dividend they have paid. So 10,000 crore only, ideally, they are keeping that money. So remaining 14,000 crore, they have given it to the investors or whoever invested on the shares, they got as a dividend format. Okay. So 14,000 crore has gone towards dividend, and remaining 10,000 crore, where they have put it, it's a profit, right? So remaining 10,000 crore
Yes.
either will be coming in the form of reserves or in the form of fixed assets. So we'll see what exactly. So fixed assets, 25,800 crore was there in the 2022, and now it is 29,225. So that means 4,000 crore is here. And our other assets, Infosys other assets is 70,189, and it came to 76,825. That is 6,700 crore. That means 6,000 and 4,000 here. 10,000 is balanced here, right? Whatever the profit has
Correct,
come,
sir.
that has directly come into fixed assets and as well as other assets. Eventually, it will go and sit in your reserves in the later point of time once these assets are started earning. Okay, and also you can see in this corporate actions whether they have issued any dividends. Last dividends they have issued on October, interim dividend. So final dividend to be issued, maybe they have not announced yet. Maybe they might announce the dividend after this in the con call or whatever, but still yet to be decided on this. So far, no updates on that here at least. Okay, and these assets, what exactly to be looked after assets? For example, 29,000, that is 30,000 crore is an asset, right? 30,000 crore asset is earning them almost 150,000 crore. That means 5 times is growing. If they have invested 30,000 crore, 5 times is earning 150,000 crore, right?
Right.
So if we look after 10 years before, 10 years before, their asset was 555 crore. So that is almost 33,000 crore, almost 6 times.
Six times of it. Six
Yes.
times of it.
6 times it's earning, and now it is 5 times. Still, you can have a look on the you can have a look on the previous year, how their assets are performing. Like say, suppose if I take here 25,000 crore, and if I look after this 120,000 crore, it's almost like a 4.5 to 4.8 times.
Again, it is rounding up to 5 nearly.
And if I look after here previous quarter as a previous year also 25,000 crore. So this 25,000 crore is like 4 times. So that means 4 times to 4.5 to 6 times, and 5 times they are there. So that means they are gradually making their investment to work or asset to work or yield them more sales. They are working towards it. They are growing it. Their assets are, they are not investing on the wrong assets. That says that asset ratios. So this one, also, you can also look after this way as well. How exactly their assets investment. This all shows in the management decisions and governance, whether management are putting their efforts in all these things in a direct way or whatever, it will show. Okay.
So this has given us a clear view on how quarterly the sales have been grown or degrown, where the reserves are being used, and how the profits are distributed amongst after the dividends. So
exactly.
We got a clear idea on how we can look into a balance sheet of one particular company, sir. Thank you for making us understand about this in depth.
Okay.
And thank you all. Thank you for watching our videos, Stock It. Keep tuned in and do like, share, and subscribe.
Thank you, ma'am.